Welcome to Bulls N Bears, where we look for the arbitrage opportunity in ASX-listed companies that are doing interesting things. I'm Matt Birney and I'm joined in the Bulls N Bears Perth studio tonight by Alan Stein, the Managing Director of ASX-listed oil and gas explorer Calima Energy. Good evening, Alan.
Good evening, Matt.
Alan and his team at Calima Energy previously took a small unlisted oil and gas company known as Ophir Energy in the UK from just 38 pence a share in the first round of seed capital to a listed company on the London Stock Exchange with a share price that maxed out at around £6 a share and a market cap of £2 billion at the time that Alan and his team exited the company. With a capital raise of £235 million, Ophir was the biggest ever oil and gas listing in London and the most successful for 2011. Well, the Ophir team of geoscientists are back together again, and this time their vehicle is ASX-listed Calima Energy with a focus on an oil and gas region in southwest Canada known as the Montney Formation. The Montney has caused something of a modern-day gold rush in Canada, with private equity firms and others lining up to throw billions of dollars at it over the last few years, and many with great success. Alan, firstly, can you tell me why the Montney?
Well, the Montney is one of the most active plays in Canada. In fact, more than half of all the rigs in Canada at the moment are working in the Montney. And it's been recognised across the industry now as one of the most successful of the unconventional plays in North America. And in fact, if you look at a basket of the Montney companies and look at their shareholder returns and compare them to their peers and some of the other players in North, some of the names that investors are probably familiar with, like the Bakken and the Marcellus, the Eagleford and the Permian, the Montney companies are outperforming their peers in those plays. So this year there will be $5 billion of investment into the Montney. Production currently around 5 billion cubic feet of gas a day, 140,000 barrels of condensate a day.
Are there any predictions out there about just how big the Montney is in terms of what its resource might be?
Yes. Look, it's a big play, huge potential. The National Energy Board of Canada recently estimated remaining gas potential 450 trillion cubic feet. Remaining condensate potential 14 billion barrels, and the remaining oil potential more than a billion barrels. So it's a big play. Now you'll notice those numbers are dominated by gas. And in fact, the unconventional play in the Montney started as a dry gas play. But as the action moved further and further towards the east, the liquid yields began to increase, and that grabbed everyone's attention. And that's what started the land grab, or the stampede, as companies rushed to get exposure to this liquid-rich window, because that's what offers the enhanced economics. That's the bit of the play that Calima is developing.
So speaking of the east, you've got your foot on some pretty prospective ground in the east of the Montney, is that right? Can you tell us a bit about the land that you've got your foot on and how prospective you think it might be?
Okay, so we've acquired drilling rights over 57,000 acres of land in British Columbia in this liquid-rich window of the play. We're targeting to build that position to around 65,000 acres. So in fact, we're almost there. We've committed an initial investment of $5 million to do the acreage build and to do the subsurface work, and that will earn us a 20% interest in this acreage position.
And you were a reasonably early mover out to the east, right? Initially, people were focusing on the sort of the west and the middle of the Montney, where there was pretty much just dry gas. But yeah, you guys looked at it. Look, and you thought that there's some value in the east side.
We've acquired this position from an unlisted Australian company. We actually invested in that company back in 2014, and that investment, of course, now resides inside Calima. The reason we invested is that they had developed this really innovative geological mapping technique to identify where the liquids-rich sweet spots in the play were. So they made a prediction that this area that we're now developing was going to be liquids-rich. But back when they made the prediction, the activity in the play was lying off to the west and the south. This was beyond the known limits of the play. So they were able to get in and start acquiring the land at a very competitive price. And in
What
fact,
sort of prices?
well,
what did you pay?
Our average, at the moment, our average entry cost per acre is around $130 per acre.
Look, I know it's hard to make direct comparisons, but how does that compare to other players in the Montney? I mean, you've said you were a pretty early mover in the east of the Montney. At $130 an acre, does that compare favourably?
Yes, look, comparisons are odious. However, in fact, the July land sale set a new record. 14,000 acres, contiguous parcel, 14,000 acres of Montney, sold for a record price at land sale of $5,500 an acre. Wow. Now, if we look at the universe of recent land transactions in the Montney for proven drilled land, the metrics are usually between $2,500 to $5,000 an acre.
So at $130, you've done
well,
pretty well,
yeah, but
right?
if you look at, perhaps the best comparison, because you always save the best till last, the best comparison is if you go just to the south of us, there's a parcel of land there that was acquired pre-drill at around $1,000 an acre. So yes, that compares very favourably with our $130 an acre, and we think leaves a little bit of salt on the bread for some upside for our shareholders.
So tell us a bit about that ground directly to the south of you. Is it contiguous to your ground, and if so, is it any kind of an indicator as to what might be found on your ground?
Yeah, look, it's become a quite important part of our story. Just to the south of us, there's a private Canadian company called Saguaro Resources, who've built an acreage position of some 110,000 acres. And if you go to the southern end of our area and you look across the river valley, they're about 2 kilometres away. And the nearest well is about 10 kilometres away.
They have operating wells on their ground, do they?
They have operating wells. Look, they're backed by some quite large private equity firms, and they've invested more than $400 million to date drilling and putting in infrastructure. And a very impressive operation. They've done a fantastic job. So they've drilled almost 40 wells. They're getting a rate of return of about 40 to 50% on an individual well basis at today's prices.
On capital expended? On
capital expenditure, and that's at today's prices. So that explains some of the appetite for the play.
And you say they're just 2 kilometres from your southern boundary, right?
We can see them across the river valley.
Do you know what they're producing a day?
Yeah, they're currently doing 12,000 barrels of oil equivalent a day, and that's predicted to rise to 16,000 by the end of the year. Now, the interesting thing is that 25% of their production comes from liquids, but almost 50% of value comes from those liquids, and that explains why the liquids-rich part of the play is so important, because it has a disproportionate effect on your economics.
How do you see the geology on Saguaro's ground in comparison to yours? Do you see any geological similarities, and have you done any analysis?
Yeah, look, we think it's directly comparable. The Montney is hydrocarbon saturated throughout the region, and we have some old well penetrations in our acreage drilled for deeper targets, but they've been through the Montney and collected the data. So we're able to compare those well penetrations in our acreage with the well penetrations in Saguaro's acreage. And that's how we've come up with this, feeling that they are directly analogous. And in fact, we had an independent geological audit of this data done, which confirmed that theory, and in fact suggests that in many respects the Montney in our area could be more prospective.
And corporately, so you've backdoored Calima Energy into ASX listed as Zonto Petroleum. You've been off the boards while you got the deal done. You're coming back on the boards, I think, on Monday the 28th of August or thereabouts. What was your share price when you went off, and what sort of market cap do you expect the company to have when you come back on again?
Well, look, Monday 28th is the day that we are scheduled to commence trading again. Before we went off the market, shares were trading at 1.1 cents. After a 1-for-3 consolidation, we have 490 million shares on issue, gives us a market cap of less than $20 million. We have $7 million in cash. Board and management own more than 20% of the business, so we're completely aligned with our shareholders and very, very focused on making this yet another successful company.
So, Alan, you're about to hit the ground running. Your new company structure will have about 490 million shares. It's a clean structure. As you say, you've got about 7 million in the bank. What's next?
Well, look, we're not the corporate spin doctor types. We're kind of get it done guys. So you're going to see the investment going into the ground. We're going to concentrate on getting the subsurface work done so that we put those wells in the best place possible, that we drill the best wells possible. After that, when we prove up this concept, the focus then switches to how best to translate that into value for our shareholders. So, our team's been together 16 years. This isn't our first rodeo. This will be our third company that we've built together.
And you're all geoscientists, right?
We're all geoscientists. So, yeah, we're all a little bit techie, if you like, but that's where the value comes from. And we think the Montney is going to be an excellent building block to build yet another successful company.
Alan Stein from Calima Energy, thanks very much for coming into the Bulls N Bears Perth studio tonight. If you'd like to learn more about Calima Energy, their new stock code as of Monday the 28th of August, after changing their name from Azonto Petroleum, will be CE1. Their share price doubled in the last 12 months on the back of this deal, but with a market cap only of around $20 million on relisting next week and some exquisite neurology, this one looks like it might have some more legs left in it yet. I'm Matt Birney, and you've been watching Bulls N Bears. For more Bulls N Bears stories, go to the West Australian newspaper website at www.thewest.com.au and click the Business tab, followed by the Public Companies tab.